Hi and welcome back to the channel. Before we look at the technicals on the charts for natural gas, just want to point out there are some interesting websites here that you could visit if you want to find out what's going on in the world and the economies of the natural gas scenario. You can just Google, I just Googled natural gas news, and there are a couple of sites, and let me know in the comments what sites you guys like to visit. There's Natural Gas Intel, that's quite a good one. Daily FX, that's just a regular site. And then this one I found helpful, Natural Gas World. And then you can just go and have a look at Reuters. Some of these articles are firewall protected, so it's a little bit difficult to get in. I'm not sure what you have to pay to join Reuters, but I don't do it. So there are a few articles that drew my attention. So we've got the usual stuff. This is from Natural Gas Intelligence, Natural Gas Futures extend winning streak, gas prices strengthen across lower 48, and 6 sessions in a row. That's important. Now, when you're trading, once you get to 6 or 7 consecutive sessions in a row in a bullish or bearish direction, be careful. Often the 6th, 7th, or 8th moves forecast or portend a potential change in direction, and then we can see more or less the storage estimates sort of ticking down and maybe going up. You can have a look through these articles, but basically what everyone is saying is what we all know, is that the gas prices are going up a bit. We've had 6 sessions in a row where it's been bullish. A couple of people have scaled back output, which is interesting, probably because there was so much gas in storage and the price was too low. Production costs were beginning to exceed the price of natural gas, and it seems to be just below $3, the sort of break-even point for most, not all, producers. And then there's a little article about Freeport, which seems to be fully back in operation by spring. They say this will be full on track. If it's not already fully operational, it will be soon, and that will result in a depletion in natural gas, domestic natural gas at least, from the export facility, storage, and then shipping across to Europe. This is the Reuters site. Some of these you're going to have to pay for, I think. I haven't looked at all of them, but you can have a look at the headlines. That's really important. Just by looking at the headlines, you can deduce quite a lot. It's a bit about Ukraine. They're going to have more gas in storage for the winter. Looks like they're going to have more gas than expected, which probably is bearish for prices. Canada investing in new projects, so they see an upside to the price of gas, no doubt. And then various other articles. So we've got storage coming down a bit. We've got exports going out of the Freeport facility. Some production facilities have cut back because of the low price and low demand for gas. Really, all of this is just saying we're in between. Yes, the price has rallied. It's gone up for 6 sessions in a row. It's gone a little bit too far, possibly. And we'll have a look at all of this in terms of the charts when we get to that shortly. And then we've got the Freeport facility pushing out more gas, so depletion in gas, natural gas storage, and so on. Really, I think this is a turning point which could go either way, and we have to look at whether we think we're going to see gas increasing in price or going back down to somewhere near the lows, or at least the support just beneath us. So that's the overall picture. I'd advise you to go and have a look at some of these sites. So this is Natural Gas Intel. If you're subscribed to Reuters, you can have a look at some of those articles. And then just go Google Natural Gas News, and there's a whole plethora of articles. So try and get a feel for where we are. It's really important to apply the fundamentals of supply and demand to what we're going to have a look at the charts shortly. So they need to go hand in hand. Don't be a purely technical analyst, and don't be a purely fundamental analyst. Let's have a look at the charts. This is a daily chart on natural gas futures, and what it shows is 3 hanging man candles in a row with a decrease in momentum towards the upside. Now, a hanging man candle is an important reversal candle because it portends a potential change in direction. And you'll often find them taking place at the top of a move. It's characterized by a long wick with a small real body on top of the wick. And often you'll see hanging man reversal patterns at key levels. First of all, what this is saying is that potentially we are at a key level. And if we look across to the left-hand side, we can see there's a little gap over here, which is potentially an important level. I'm going to just add one more line in, and I'm going to put that line over here, right where we are at the moment. You can see it's a previous resistance level, but it's also just above this gap where we got 2 kind of spike low wick reversal candles just above it. So that's at $2.77. Now remember, I said we'd be looking for $2.60 to $2.70. We've gone up to $2.80 almost. And if we just zoom out a bit, that line that I've just drawn at the top there, underneath that gap, you can see it's actually a pretty key level on the chart going back to 2021. It's not clean, it's not tidy, it's not neat, but it's an area of consolidation, an area of toing and froing, supply and demand, and up and down, thrashing about with lots of reversal, intraday and daily reversal candles going on. And that's where we are at the moment. So even though it's not a clean level, it's certainly an important one. Now what we can do is get rid of these and have a look at the chart by itself. Now, I've got this zone up here, which I've continued to believe might be our target zone at around about $3.50. And right now we're at $2.77. You can see today has just kind of opened a little weak. Not much, just moving down a bit. Let's have a look at the shorter term charts. We'll go down to the 4 hour. Here we have actually broken through the downward sloping 200 period moving average on the 4 hour chart up to this level. And you can see that the 20 period moving average is just touching this 200 period moving average and threatening a crossover. What we have now formed by these two moving averages, the 20 and the 200, is a pretty strong support level. Also, since the breakout, remember I mentioned in some of the previous videos, we broke out above the 20 period moving average on this 4 hour chart, and we haven't looked back since. We've held above it a number of candles ago. We dipped down and just touched it, just down through that support, but we had a sharp rejection higher, followed by a big bullish candle, bit of a bullish flag, another move up to where we are right now. So we've got the staggered 3-move formation. That's another thing that's formed these hanging man candle patterns. See these 3 bullish candles here? That's a 1, it's a 2, it's a 3. It's a 3-candle or 3-move impulse rally, I suppose you might want to see it like that. That could also portend the end of the bullish move for now. So that's what the 4 hour chart looks like. Still looks bullish. And if we zoom out on the 4 hour chart, our target's way above us. So at that $3.50, 60 level. So we've got some room to go. We're only at $2.77 right now. So let's have a look at the weekly chart. We've already looked at the daily chart. The weekly chart, we had a big, well, it's not quite a bullish engulfing candle, but it pretty much is. As good, as close as you might hope for in any case. We've got a lower wick. Not only is it a bullish engulfing candle, but we also have this lower wick or spike down followed by this bullish candle, which completely engulfs the week before. And we've held above that quite beautifully into the resistance zone that I keep on talking about. So we've still got these levels on the chart, these 3 levels here, plus our target. That's where we're going to be trading in for the next number of weeks, I would imagine. We're going to be either reaching up to here around $3.50, or we're going to be falling back down to some of these support levels. And worst case scenario is we could fall below this red line at $2.34.33 and move down back to $1.97 or 95, or whatever price you might have got on that, and then potentially below. Right now, though, it's looking really constructive. And I think that our target of $3.50 or 60 remains in sight. Going back to the daily chart, let's have a look at how we could trade this. And I'm just going to give you some ideas. This is not trade advice. I'm no expert in natural gas. I have been trading for 20 odd years, 21 now, but it doesn't make me an expert or anyone else who's been trading for a long time. So keep that in mind as a serious caveat. And I always have to put caveats into these videos because I don't want anyone acting on something which is contrary to their own view and opinion. These are just my views. You need to trade your own book, trade your own strategy, and believe in what you think is the right way to approach this. So having said that, I think that this level here at $2.60 is really, really key. If we manage to close beneath that, and there is a chance of that happening right now, then we might see another move down to $2.34. And we're going to be, as I said, looking at these 3 levels down here and our target level up there for a number of days and potentially weeks to come. So keep that in mind. This is not going to be a quick in and out, quick job, unless you're day trading. And then you might want to know, well, where are we going to be rallying to? Where are we going to be dropping to? My idea on this is to hedge. I'm not going to exit these longs. I'm still hoping for this target. I'm going to hedge my long positions if we drop below and close below, probably on a 4-hour basis, below $2.60. That will be my trigger and I'll be watching on the 4-hour charts. Unusually, I'll then be hedging that. I'm not going to close any positions, and I'll place a short position in to hedge the long side that I'm on at the moment. If we move down, at some stage, I'll close the short hedge and then retain the long one, and maybe even add to the long side when we get to $2.34, if that happens. If nothing happens and we don't get a retracement and we start heading up higher, then I'll change my strategy and rethink it. And, maybe we'll get to $3.50 or 60 in the next few days. I don't know. If we do, I'll close my position and take profit and then wait for a retracement back down from there, perhaps down to this top red line or down to this 50-day moving average, which will have potentially moved further down towards this top red line by then anyway. So take profit and look to rebuy on a dip. Or if we don't manage to rally up towards there right now and we start to fall back, I'm going to look to hedge the long side with short positions down below here. The other way you could do it is simply close take profit now if you think that we're going to drop down. I'm not too sure. I really don't know. We might rally up or we might retrace. Very, very difficult to tell. I must just point out, someone made a very interesting comment on one of the previous videos, and I'm going to change this actually to a regular scale so that you can see it a bit better, is that we're actually now in the price range that we've been in for a long time. I'm going to change this to Henry Hub. So we're on the Henry Hub now. You can see that this range here, and let's just draw another line in because this is important. This range here that we've dropped back into and we're right in the middle of, this is really, really important. See where the price is right now? See where this purple line is and this red line? That is kind of the range that natural gas naturally trades within. It's not unusual for us to remain trapped in this range for a very, very long time. Right now, you couldn't get more slap bang in the middle of this range than we are right now. We're at the average median resting price of natural gas. It's not extremely low. Don't think that just because we've been up at $10, that down at $2.77, that it's a very, very low price. It isn't. Notice that this purple line, now I haven't got that salmon pink area, that target zone of $3.50 on it because I've changed charts. Our target is actually at the top of this range, $3.50 or 60. And you'll notice if I move this line actually up to $3.50 or 60, which is, let's call it I'll leave it at 358. That line there, our target level, is actually the top of this overall range. The bottom that we reached a few days ago is actually at the bottom of this overall range. So we're right in the middle of that right now. I want you to be very aware of that because natural gas right now is not overbought, it's not oversold. In overall perspective, in a long-term perspective, and this chart goes back, I don't know, quite a long time. So going back to 2010, 13 years ago, you can see that the price has traded. We get these occasional spikes. That happened in 2008, and we had one recently in this last period. Overall, natural gas likes to trade right where we are at the moment. And in fact, in previous times, it's been even lower, back into the 90s and early 2000s. Don't be thinking that natural gas is way too low for its own good, because it isn't. That's the overall strategy. And if we switch back to the daily chart, go back to my futures chart that we had on earlier, and we've got a daily chart here. So target up there, $3.50 or 60. Compare that to what we just saw on the weekly chart on Henry Hub. The lows below us, potential support levels down to $2.35, $2.60, $2.35. And worst case scenario, we fail here and we then move down below $2 again and try to make a new low or a double bottom at around about $2. Well, good luck with that. I hope that's given you some broader perspective on natural gas rather than just looking at the short-term charts, which we did in one or two of the previous videos. Good luck with natural gas. Take care. And if you enjoyed this video, please consider subscribing to this channel and press the like button on this video. And also go across and check us on our Twitter feed. Take care.